panel. This is a deep dive into customer experience, accelerating Africa's financial inclusion journey. Just as we begin this panel, financial inclusion for me has been one of my sort of like sweet subjects. I do love the aspects of financial inclusion. I'm really looking forward to this panel and the discussions that they will be having around not just financial inclusion in terms of access, but also in terms of literacy. To start off, I'd like to first welcome our moderator, Kenneth Ringera, the account lead at Microsoft East Africa. He'll be the moderator for the session. His panelists are Dr. Henry Kisembo, Global Chief Managing Partner, Development Associates, Link International. We also have Matilda Kobia, who is the Group Head, EFX Solutions and E-commerce Sales Treasury, Equity Bank Limited. We have Sandeep, who is the Director of Digital Transformation and Technology, Absa Group, Mauritius. Last but not least, we have Kolpid Paliwal, Managing Director and CEO of First Alliance Bank, Zambia. Welcome. Over to you, Kenneth.
We just got notified that Kenneth is joining now. Kenneth will be in 30 seconds. While Kenneth comes in, may I please request Kuldeep and Dr. Henry and all of you also maybe take turns and introduce yourselves to the audience.
Okay, thank you. Thank you so much.
Yes. Okay, let's go like this. Ladies first. Matilda, why don't you introduce yourself? You are on mute, Matilda.
Sorry about that. Thank you, Mohammed.
That's all right.
As I had, I'm Matilda Kobia. I'm currently the group head of e-commerce within Equity Group. I run with digitizing the treasury department across Kenya and all other subsidiaries. So today I'm here to discuss, I'm happy to discuss acceleration of financial inclusion within Africa. And I'm here to learn from you people as well. Thank you.
Thank you, Matilda. Let's go with Henry now.
Okay, thank you so much. Are you getting me?
Yes, we can hear you.
Yes.
Okay, great. A very good morning to you all and nice to be here. I'm called Dr. Henry Clark Kisembo, and I am the Global Chief Managing Partner at Development Associates Link International. We have been in the marketplace 17 years, of which 10 to 12 years has been driving financial inclusion. We are based out of Uganda, where we're headquartered. However, we work across all Africa and other countries, which is 69 countries. Nice to be here to share skills, knowledge, and also to learn. Thank you so much.
Thank you, Henry. Let's move on.
Okay, good morning, everyone. My name is Kuldeep Paliwal. I am the Managing Director and Chief Executive Officer for First Alliance Bank in Zambia. I'm into banking for last 24 years, worked in India, Maldives, Tanzania, and Zambia. And my area of expertise remains retail banking, wealth management, private banking, commercial banking, and corporate banking. And across 24 years, I've worked in these areas. So I'm very happy and very delighted to be part of this panel. Thank you very much.
Thank you. Let's now call upon Sandeep.
Hi, everyone. My name is Sandeep Mohapatra. I am the Director of Digital Transformation and Technology at Absa Bank, Mauritius. Absa Bank, Mauritius fundamentally believes in bringing possibilities to the life of our customers. We've been doing that for the last 100 years and more in Mauritius and across many parts of Africa. We were recently also very proudly won the best digital bank now 2 years in a row in Mauritius. So very happy to be a part of the panel, to learn, listen, and to contribute, hopefully.
Thank you to all the panelists, and a very, very, very warm welcome to all of you. Last but not the least, I'm going to now invite the moderator for the summit, of course, for the panel. May I please request Mr. Kenneth to take the floor?
My name is Kenneth Ringera. I'm delighted to be hosting the esteemed panel of CXOs who have just introduced themselves. We will be looking at the first panel, where we'll be looking at Africa's inclusion, financial inclusion. And just to dive in, I'd like to start by just asking the panelists in no order in particular, why should we have an omni-channel, and what does it mean for traditional banks and the digital banking trend to have this setup, and how does it talk to bringing in the financial inclusion that we're looking at?
Thank you so much, moderator. I think I'll go first on this. And being field-based and interacting with quite a number of customers and providers, right from the macro, meso, and micro level, I would say that omni-channels is really very important, in that if we are to accelerate and also reach multiple persons on the continent, especially those who are underserved, we have to focus on different channels which have to reach them, not only those in the urban areas, but also in the peri-urban and rural areas. You realize that most of the African countries, the majority of the population, say 80%, is either in the rural or peri-urban. Now, omni-channels offer that direction, or offer them an opportunity to be able to be of the whole ecosystem, the banking or financial service ecosystem, where we can't put brick and mortar or banking buildings, or where we can't have enough infrastructure, then it would reach there through the different channels. For example, agency banking. Yeah, for now, I'll leave it at that. Thank you.
Thank you. Let me on from here. I think our friend has very well described. Let me take it more simplistic way. I mean, what's the omni-channel all about it? See, service industry is the industry which has evolved the maximum. I think out of 10, 15 industries you take, the service industry evolved a lot in the last 20 years time. So customer need more easy of doing things, feeling home, and don't want to go to the bank now. I mean, that's a trend we are seeing everywhere. I think all our panelists has talked about this in the previous presentation I was looking for. So in order to make it very, very simple, omni-channel means you should feel same exactly across all the channels. Earlier customer used to visit only the branch. That was the only channel available. Now, multiple channels available: internet banking, mobile banking, agency banking, go to the kiosk, go to shopping mall, and a lot of things, banking is available on your phone, on your laptop. Omni means it has to look similar. Customers should not feel any difference whether I'm going to the branch or I'm logging through my tablet or I'm going to agency banking. My look and feel is very, very same. I feel similar products are available, even include the color of the screen is same. The branch color and the agency banking color is also nowadays matching. So customers feel very, very thing. Other thing is that while our life has become very complex in 20 years, but still we want a simple solutions for banking. That's another, I will say the anomaly, that we are getting complex life day by day, but banking we want simple. So in order to make it simple, bank has come out with this concept of omni-channel and simplicity, onboarding of the customers. So as you talked about, what is the difference between the traditional banking and the digital banking? I think both are moving in the similar directions, and the good blend of these things will make the banking more easy. That's why I leave it to other panelists now.
Thank you. Matilda,
Matilda, you are.
Matilda, go ahead.
Yes, sorry, I will add on to that. I mean, in also simple terms, omni-channels is seamlessly integrating the multiple channels within the banking to provide the access to financial services. So why are we, I think right now is, I mean, it couldn't be a better time for us to embrace omni-channels. This is because a huge population, especially within Africa, is has young people who embrace the omni-channels and the digital space. In addition to that, we have a rising in middle class who are currently demanding also more sophisticated products and services as opposed to the traditional banking that we had. So I think this is, I mean, channel, and we accelerate the financial inclusion within the continent. Thank you.
Thank you. Sandeep?
Yeah, so I think the underpinning theme of financial inclusion, if we look at it, and if we look at the way traditionally businesses were done, when we said channels, it was largely infrastructure heavy. It was reliant on physical networks, reliant on human interventions. And so we look at a branch setup, we look at, your typical relationship managers, we look at typical call centers. But I think what it does is that it adds to the customer's experience in terms of a higher turnaround time, restricted access, and more importantly, higher cost to serve. And I think that has been the primary barrier in the physical channels, right? So then with obviously the backdrop of COVID, with fundamentally changing behaviors of the customer, we're seeing that surge of adoption. Customers want to interact and experience their branches. So we look at various digital engagement models, like we look at web, we look at app, we look at now social media, we look at now WhatsApp banking, we look at wearables, and we're looking at even phygital channels now, as they call physical channels, which are digitally self-serve channels with the power of IoT, be it kiosks, be it smart teller machines, or be it humanoids. And we're seeing that fundamental shift in that customer behavior to do this. And it allows the banks then to offer their services at a much lower cost to serve, which in turn gives way to financial inclusion. And I think that is a fundamental change that we're seeing. And we truly believe that the bank of the futures will no longer rely on the physical networks, right, as the primary banking model. If I look at the trend, I can see that the banks are starting to now move away from branches as transaction hubs, but rather looking at people that they will deepen relationships or add value in specific high-value transactions while complementing the overall digital core. And in a true complementary fashion, we will see emerging technologies interlace into the physical networks to make it more secure, to make it available, to make it 24/7. And I think that's the true essence of a phygital or an omni-channel strategy. And I think truly this is where the banks are heading, and that's the future.
For that, I think you've painted a picture of what Omni is. You've painted a picture of how the customers have changed. I just wanted to ask, has regulation supported this development? Do you feel that regulation has kept up with the change in how you want to serve the customers and how the customers have changed? How would you describe the current regulatory environment that you have to deal with?
Yeah, I would say, sorry. Okay. Initially, so many years ago, technology was moving faster than the process of formalizing or formulating policy, regulation, and even laws. So you find that a number of players came into play, not only banks, but other providers of financial services. Now, with the slow process of formulating laws or regulation, there was more of risk for both the customer, but also the provider like a bank, because you realize that collaborations or cooperation between bank and other providers was a bit was risky, but also wasn't forthcoming. However, for now, as it stands, with quite a number of experts onboarded to central banks in different countries, so now the regulation and policy is helping a lot in one, protecting the customer, but also their information, not only their money, and also safeguarding and protecting the banks and financial service providers. So personally, I think that the country where I am based, it's a central bank which has taken lead on championing the financial inclusion strategy, which has 6 objectives under which all financial institutions now operate. So you realize that policy regulation has come into play with more technology experts onboarded. It's becoming more faster, but also amendment of acts, because the examples here were that with so many players, including money lenders, you just walk in and you leave your logbook and you walk out. For a bank, the turnaround time could have taken maybe 28 to 48 hours, but they take about 3 hours. But that was a high risk, very, very high risk. Would rather deal with the bank. But now with amendments of the law, especially the Financial Institutions Act 2017 for this country, and which is happening in different countries also, the regulatory side of it, I have a strong belief and I'm optimistic that it is beginning to catch up and match up. Thank you so much.
Thank you. Matilda, you want to weigh in on that?
Yes, so I feel in our country that the regulators have taken part. I mean, they've really tried to support in this development of solutions. So we've seen in our country, as much as, yes, it is supported, maybe the entries of innovative, a lot of innovation that's going on right now, not just in the financial services, but also outside financial services. We've seen in the cases of M-Pesa, we've seen mobile lending platforms, but at the time, it is also precaution on money risks and protecting the clients by ensuring that they also create barriers of such of different solutions, where maybe in areas where feel the customer will not be at a good standing, or maybe they're not yet understanding the innovations that these players have to offer. Thank you.
Kuldeep?
Okay, I think I fully agree with both of my colleagues that the technology is changing very fast, customer behavior was changing very fast, but the regulator were not making pace with it for a long time. Now time has changed. Dr. Henry has said that now regulators are adopting, and I think 2-3 main reasons for that. Number one is that the government is also not getting e-governance savvy. Most of the government I have seen now coming up after elections and all, they are talking about the e-governance and all. So that gives a thrust to marry the fiscal policy and the monetary policy and all those things, including financial inclusion. And without technology, you cannot do financial inclusion. It's impossible to reach to 90% or 80%, 90% of financial inclusion in a country. So that's how, both the pressures from the government, plus most of the country are dealing with World Bank, IMF, or several, credit programs and other things. From there is also pressure is coming that you need to digitalize things, you need to be more transparent, you need to be more financial inclusion, you need to give more rooms for innovations and self-employment in the country. And that is only possible in the remote area of somebody having access to finance, and how you will go without a technology. So the regulator is also under pressure from the customers, from the government, and from the international financial institutions. And I think it is going in the right way now. Thank you.
So while I was listening to other panelists and I fully concur with your views, especially if I talk about Mauritius, financial inclusion has not been a real concern because more than 90% of the adult population here is banked or multi-banked actually. But digital inclusion has been on top of the agenda for the central bank of late. And in terms of initiatives, when we look at it, we're seeing the central bank, has played a pivotal role in completely revamping the entire payment stack. They've introduced something called MOCAS, which is built on open banking standards. It enables both banks and non-bank operators to become interoperable, to become low cost, to do instant payment solutions, and they've introduced a national QR code. So we are seeing now a sea change in terms of the payment, of how the payment has been made. Recently, even central bank announced the launch of CBDC, or the central bank digital rupee. Now, this has again very wider implications and could potentially disrupt the way people bank here, transforming not just cross-border, interbank, peer-to-peer, but obviously it comes with a large amount of benefits such as reduced dependence on cash, and we might be heading towards a less cash or a cashless economy, with reduced transactions cost, more security built in. If we follow the finance budget which was presented, we also see that the central bank has announced some very groundbreaking innovations, including the CKYC, access to private players into the government's information highway. We're looking at a credit scoring APIs being provided to the financial institutions for faster credit assessments. And I think that has got a very wider implication in terms of how this is going to drive the digital inclusion going forward. So yes, Mauritius has been very progressive.
Thank you. So we've looked at what needs to happen. We've looked at the customer. Sorry, Sandeep, are you still talking?
No, I'm done. I'm good.
Okay. So we've looked at what the customer changes have been. We've looked at what technologies we are deploying, and we've seen that the regulator has also needed to keep up. What I would like to ask is, as institutions, have we been left behind? Have we caught up? What is your take on what needs to happen internally for all the banks, both traditional and the digital banks that you've all mentioned? What needs to happen internally for us to be able to say that we are actually ready to meet the requirements of saying that Africa is financially included for each and every citizen?
My take would be that we need to look back at the digital transformation journey. When you look at banks, for example, digitalization of transactions or product offering in the past, though it's changing now, has been left to a single department in charge of digital finance, for example. But the digital transformation journey is not just about the department. The department may champion it, but then it's all about all other departments and directorates within the bank, right from the top to the below, and everybody who is involved and engaged in this product provision, but also the product development. What is that which can be customized and is easy to access by the customer, which does not create risk for the financial institution along the channel when money is being either sent or received. Remember that we also have now remittances. I no longer have to go to some building to receive money from offshore, from off African continent. I just have to have it on my gadget, as long as I have mobile banking services, or direct remittances, which there must be a point of origination, termination, but also watched by the central bank. So for me, my take is that it's about the digital transformation journey, and each and every player within the financial service provider or the bank, whether it's other providers, should be able to embrace it, own it, and not leave it to just a little few people within a directorate or a department. Right from the board, CEO, department heads, even to the right to the tellers, and that will interpret as customer experience with the agents who are outside there. Thank you so much.
So I think it's just to add on my colleague, it's a collaborative effort from both from the technical teams within the financial institutions to the customer-facing staff within the institutions, and also to the clients, because sometimes the products and services that we come up with that lead to this, that accelerate this financial inclusion, will be as per what customer needs. You know, so if we're able to tap into a new market, what do clients in those new markets need, and how are we going to apply that technology to reach out to those clients, and what services should we offer these specific people within the to be able to accelerate the financial inclusion aspect. So it's a collaborative effort, and not only to the financial, I mean the staff within the financial institutions, but also to the regulators and to the clients as well. Thank you.
Okay, if I add on to further, as my colleague said, that digitalization is not a one-man show in the department or somebody, one department. It has to be part of journey across all the departments, across the organization. So that's a part of journey. It's not a specialized function anymore. Everybody has to follow that. And any banks or any financial institution which will fail to come up with time with the new world order, they will be left behind, and then it will be very difficult to catch up. So it is important for the traditional banks and the commercial banks, where I know I have attended several conferences and seminars. People talk, the banks are still sleeping. They are the dinosaurs. They will extinct very soon if they don't embrace the change. And the fintechs are going to take over the bank. And believe me, sufficient experience in the banking. It has to be a good blend. Only fintech cannot do anything. Only banking cannot do anything. I think is a word of collaboration, as my colleague has rightly said, that everybody has to come together to give a common solutions to the clients. And I think that is what most of the banks are doing. Some banks are doing on a standalone basis. They are developing their own incubation hub, on technology hub, and all those things. Some people who can't afford it, they are doing a collaborative tie-ups with several fintechs and moving ahead. So the message is very loud and clear. Without technology, you cannot survive. I will submit with that.
I think for me, there's no point belaboring it, any further. They've exactly hit it on the spot. Digital transformation is a mindset. It's a culture. It's not a function. It's not a hierarchy within the department. But more tangibly, to establish this, let me give you a few examples of how we could swiftly move as an agile financial organization with that cultural mindset change. So during, for example, our pandemic, we started seeing those changes. We started obviously seeing lockdowns. We started seeing low traffic and footfall in our branches. And then we said, okay, what as an organization should we now do to be future fit, right? And we quickly identified two big areas that we needed to work on. So one was, how do we change the way in which people today interact in our physical world or the physical network, which is our bank branches, and how do we target the evolving digital needs? So in the physical world, we launched something called Abby, AI-backed, digital personal banker, which was available across our branches in a tablet and in a humanoid form. Not just that, we aided it with technology like face recognition, voice recognition, natural language processing, autonomous navigation, and so on and so forth to provide the swift self-service. We immediately responded to say, okay, people go to our ATMs, but there are sanitary protocols, right? How do our people withdraw money from ATMs without touching the ATM? So we introduced something called contactless QR-based, ATM withdrawals on our smartphone. Similarly, we introduced contactless cards, and in the digital world, we converged all the app into one super app for all our business segments to be able to log on from one app. We introduced digital onboarding across our platform, across our entire business segments, be it retail, corporates, business banking, international customers, and so on and so forth. We introduced WhatsApp chat banking. And why I'm saying this is all of these initiatives happened in a period of 1.5 years during the pandemic. And it cannot happen if it was just one department. If it was just a few people driving that change, it would be practically impossible to work on all those fronts. So it requires that collective, that effort, that mindset change, that culture, which is driven top down, bottom up, all the way through to be able to bring that tangible possibility to life. So this would be my submission.
I think you've all done justice to this discussion. I'd just like to ask for your final statements as we try to accelerate Africa's financial inclusion. You've painted the picture of the journey. What are your final statements, and what would you like to see in the next few years for us to say that we are fully on the driving seat in terms of Africa's financial inclusion?
My final take would be, I see an Africa where uptake and adoption of digital products, financial digital products, is increasing and rising because recently, a couple of months ago, we launched Pan-African Payment and Settlement system in order to regularize, but also have a common aspect across countries, but even within countries. So I see technology becoming less costly compared to 5 or 10 years ago when we're starting off. So adoption and uptake is going to increase, and also with mindset and cultural change, there is a lot of transformation that's going to happen. Thank you so much.
Okay, so Ken, for me, I see expansion of access to financial services through different financial institutions. And these are not only banks, but also financial institutions that can cater for the low income, people who are not able to access the usual financial services. Secondly, development of products and services, especially to those ones who are not able to reach out to these products and services that are available, say the low income and moderate income people within our community. So once we see them included into this transformation, then that will bring a huge change. And lastly, there's also financial literacy in different communities, whether it's with the people who don't access the services or to people who access the services. So by that, we'll be able to see people taking up different approaches to this transformation journey. Thank you.
Okay,
Thanks,
my take on.
I know you did a lot of activity. Thanks, Kuldeep.
Okay, I'll comment on my take on is that Africa is a young continent, and we have a lot of hope with youngsters and the kind of adopted changes which is coming up. I think young people are adopting technology very fast, and financial literacy is very, very important, as my friend has already said it. And with financial literacy, with the young generation coming up at technological solutions and financial inclusion, I think future in Africa is going to be digital. That's what my final take on.
My final take is that to be able to solve a problem, we must find what is stopping us today from going there. But if I see that equation, I see that cost to serve, which is again within the control of the bank, is really stopping financial inclusion from going to the bottom of the pyramid, and that comes in the way. How do we solve that problem of cost to serve? I think the shortest possible way to do it is to do it digitally. so that it is scalable, it's low cost, it's available 24/7. Now, coming to the next point, how do we then build digitally in the shortest possible time? I think my take is banks could embrace cloud infrastructure, interlace emerging technologies at scale and at speed without having to lock significant costs, time, and improve their go-to-market. And banks could also fast-track this by co-creating and collaborating with fintechs to tap into the wider ecosystem without necessarily having to build everything from scratch. So I think, therefore, digital, embracing technology, and finally co-creating would help us go faster into solving the cost to serve, which would then lead to financial inclusion.
Thank you very much, my esteemed panelists. And with that, I'll hand over back to Mohammed Tawfiq for the next session. Thank you so much.
Thank you.
Thank you. Bye-bye.
Well, just before the panelists leave, no, don't leave just yet. Just a moment. All right, so do we have, okay, Kenneth is also here. Now, I believe we have a question from the audience. Michael, may I please request you to go ahead and give the question to the panelist and the moderator.
Thank you, Mohammed. So the question that's been asked is, we've seen a lot of priority taken up towards access in terms of financial inclusion. When do we start seeing financial literacy being taken up, either from a regulatory perspective or from the industry players, whether they're banks and fintechs? Just what are they doing now that access is available through either USSD, mobile app, and web, and that penetration has greatly improved? Is there now when do we start seeing a focus towards literacy?
What I would say is that we are on the journey already. Financial literacy is a part of the drive of the central bank, and financial literacy, of course, goes with digital literacy, because you could be financially literate, but what about the digital aspects, the interpretation of the apps or the USSD codes or whatever? So we're already on the journey, and there's a lot of, for we in Uganda, we're already also establishing, like at DALI, Development Associates, we've established learning management systems, which are just plugged in with content, and then content can be delivered to the mobile, through a mobile app for those who have smartphones. And then those who have the feature phone, it can come in as a message through either USSD code or messages which are sent out for literacy. And also, not only through the central bank or banks, but also collaboration, the national technical working groups, which have been organized, represent the private sector, the civil society organizations, and also community-based organizations, to be able to roll this out throughout the country, right from urban to the underserved populations. Thank you so much.
Okay. Yeah. So the financial literacy has already begun in Kenya, specifically for the organizations that have previously Absa and currently working with Equity. The organization going out of the way to hold workshops with clients, holding competitions with especially the students within the universities, go out to the other communities that are not quite reachable within the rural areas to speak to clients. And in terms of from the regulator's point of view, we as financial institutions, I think we're the ones who will also push the regulators to create more in terms of financial literacy to the public. So yes, there's a lot that needs to be done,